Ladies and gentlemen, it is with great pleasure that we present to you today the initial result of Payment Impact.EU project. It is the outcome of 4 years of work by a Polish-Belgian team in cooperation with the European payment services industry. In today's presentation, we want to address the future of open banking in Europe from the perspective of providers and customers. The aim of our project is to comprehensively explore the impact of PayTech development and laws on the introduction of innovations in the payment services market, taking into account consumers' needs and strategies of financial sector. Our non-commercial project is funded by National Science Center in Poland. It consists of 2 major studies. The first is an expert survey which involved the representative of institutions operating in the payment service market in Europe. And the second study was a consumer survey of European internet users who are the target group of payment services based on PSD2 regulation. We would only implement our study thanks to our partners. These are European Banking Federation, the European Payment Institution Federation, as well as the Polish Bank Association, Febelfin, the Belgian Financial Sector Federation. Our media partner is the Papers website. Our research partner is the law firm DLK Legal. Our research covered virtually the entire payment services market in Europe. The expert survey involved 202 respondents from 30 countries, including all European Union countries, plus United Kingdom, Switzerland and Norway. Experts were recruited from all types of institutions that are stakeholders in payment services market, starting from banks, payment schemes, non-bank payment service providers, technology providers, public institutions, supervisory bodies and research centers. The customer survey included 5,500 respondents from 22 European countries. The sample includes the 20 largest European Union countries, covering 96% of EU internet users, and additionally UK and Norway customers. Thanks to this approach, the study provided insight into the future of payment from the financial industry and payment service users' perspectives. So, how is open banking changing the payment service market? There was a radical change in how experts perceived the main challenges to traditional business models in European payment services market in 2020 and 2025. This provides the information that they expect big change in the market in the next 5 years. In short term, the biggest challenges were related to legal regulation and technical requirements. It's about open API, customer data protection and strong customer authentication requirements. Competition between banks plays also an important role. Legal regulation required a lot of market attention. However, once they are implemented, there will no longer be a key change factor. In the long run, the consequences of current legal regulation become apparent. The biggest change is a radical pivot from competition within the banking sector to competition with new players, global big tech companies and technological-based non-bank paytech companies. The third major long-term challenge is development of pan-European payment infrastructure. In summary, it's apparent that the change of the payment services market are fundamental. So, who will gain and who will lose from these changes? Respondents assessed the long-term impact of introduction of Open API under PSD2 in terms of the benefit and losses to particular players, taking into account their market position. The main effect agreed on the vast majority of market experts is that bank will suffer long-term losses to their market position. In turn, non-bank providers, both big techs and technology companies operating under payment institution and electronic money institution licenses will benefit from these solutions. More than 3 or 4 experts are convinced that the long-term benefits gained by e-commerce sellers and consumers. In contrast, opinions are divided on the benefit of other institutions such as payment processors and especially acquirers and payment schemes. Vendors in physical distribution channel won't feel the impact of Open API too strongly. Summarizing up, the biggest beneficiaries of Open API development will be those non-bank entities that are most directly involved in development of electronic market. The benefits or losses for the particular groups of actors are connected with the detailed anticipated effects of implementation of open banking. Experts generally believe that most credit institutions would provide service under the TPP model. At the same time, however, there is almost a consensus that TPP services will allow big techs and to begin offering financial services at a full scale. 3 or 4 of experts predict that the competition between account providers and TPPs will be mainly through improving the front end, and in this area, non-banks are highly competent and can compete with banks. Most experts believe that the need to ensure compliance with PSD2 regulation will result in significant increase in operation costs of banking sector, so we should think about profitability of the sector. Some experts believe that payment initiation service-based services will bring an additional source of revenues to account providers. However, similar number of group of experts indicate that payment initiation services could significantly decrease account providers' revenues from merchant payments. Additionally, 4 out of 10 experts believe that open banking could degrade banks and other account providers to the role of infrastructure providers when the front end will be provided by TPPs. Experts pointing this scenario represent a large but not dominant group of respondents. On the other hand, most experts believe that TPPs will not take over most of payment transactions within 5 years. However, as many as 1 in 5 experts predict such a radical shift in the payment service market. The rate of changes may be the deciding factor here. So, let's check where customers in European Union market are ready for open banking service.
While constructing this section of the study, we focused mainly on the precise phrasing of the benefits to consumers and the context in which the account information service is to be applied. This was due to the fact that at the time of the interviews, those services were not yet widely introduced in the market. As you can see on this slide, that consumers' research indicate that just over a quarter of respondents are willing to share their financial data in order to receive a better product offer, which translates into 98 million potential users in the European market. This shows a very high level of adoption of the account information service among European consumers. We conducted a similar analysis for the payment initiation services. We asked consumers about their tendency to use a convenient payment service. This solution has a higher level of consumer interest than account information service. Almost 1/3 respondents show a potential for adoption, which translates into 116 million potential users in Europe. Similarly to account information service, this solution was mainly chosen by young people under the age of 34. The service is also less negatively perceived by older users. This may be because the context of this service is better known to the general public. For example, in payment services based on card wallets like Uber. Therefore, the obtained results indicate that as a result of a natural process of generation replacement, the percentage of people willing to use this type of innovation should significantly increase in a couple of years' time. The presentation of example solutions based on payment initiation service and account information service suggests that their providers may not necessarily come from the banking sector. Therefore, it is important to check the attitudes of European consumers towards the different type of providers in the area of perceived satisfaction of consumer needs by comparison to the service provided by banks. The survey showed that significant proportion of European young consumers agreed that non-bank payment providers provide a better services than banks. That was over 50% of young respondents. Among consumers, we see a significant number of undecided ones, which may indicate that there is a potential for the development of solutions provided by non-bank providers.
We analyzed as well the degree of consumer trust in sharing their financial data. In this area, there was a clear leader: banks, as the institutions operating in the financial services market. They were indicated by 82% of respondents and followed by card organization, trusted by 77% of respondents. Of the large technology companies, nicknamed GAFA, consumers reported the most trust in Amazon and Google. What can be related with providing Amazon Pay and GPay? We also ask consumers to assess an additional category of suppliers. That is, technology companies and startups. Although this category remained rather undefined, because we didn't indicate specified brand names, 1 in 3 respondents declared confidence in sharing their financial data to these entities. Based on the previously obtained results, we conducted an analysis that helped us determine the potential level of adoption of open banking innovations among European consumers. Our research was based on the Rogers Innovation Diffusion Theory, which states that there are 5 types of consumers in the population that differ in their time of adoption of innovations. The results indicate that open banking will be relatively slow to adopt among European consumers. The vast majority of the European population will adopt open banking at a very late stage or not at all. Given the interest in potential services, if they were to be provided by banks, consumers were willing to adopt them somewhat more quickly than the whole population of respondents. However, still nearly half were unlikely to adopt open banking innovations. It is important to note that the consumers who prefer to use Visa and Mastercard for payment initiation services tend to adopt such innovations more quickly. Nearly half would become potential users at the early majority stage. It is worth highlighting that potential users of services offered by big techs are showing an even faster rate of adoption. In this group, 1 in 7 members is an innovator, and by the early majority stage, the innovation would already be adopted by 2/3 of potential users. However, it is the respondents who prefer solutions provided by technology companies and startups that have the fastest rate of adoption, where 1 in 5 respondents claiming that they would use payment services provided by these entities were classified as innovators. It also means that the customers of technology companies will act as the creators of new market trends. The results discussed here help us understand the characteristics of consumers in the European payment services market. Therefore, we attempt to verify the strategies adopted by different institutions for implementing technological innovations in finance. Market experts agree that payment innovations should be introduced by non-bank PayTechs. These entities have many advantages that allow them to effectively develop, test, and implement technological innovations early. This is manifested both in the context of their relatively low level of regulation, greater freedom in market operations, and flexible structures that allow them to quickly adapt to new trends and changing market conditions. Experts claim that banks, on the other hand, should implement innovations at the time of their market growth. This is because banks are highly regulated and thus should not make excessive risk exposures. At the same time, big techs are able to effectively implement innovations at every stage of their life cycle, which allows them to be more flexible in implementing innovations than the other two groups of entities. Experts were asked to indicate the potential relationship after PSD2 implementation, and they could select one of four possibilities: competition, cooperation, co-opetition, or no relationship. On the basis of the obtained results, we developed the following matrices showing relations between a given entity and other market participants in two independent dimensions: cooperation and competition. The size of a given bubble indicates how much respondents agreed about a given type of relationship. It is larger when there is a greater agreement among respondents about the nature of the strategic relationship between given players. The results indicate that two major strategies dominate the payment services market. Payment services providers tend to co-opete, while payment processors and original equipment manufacturers providers cooperate with the other market players. According to experts, banks, for obvious reasons, view other credit institutions as their natural market competitors. However, there are levels in which they take joint and organized action, for example by initiatives taken within national bank associations. Banks are the only ones that tend to be cooperative within one sector. In contrast, strong intra-sector competition was demonstrated among payment service providers, such as payment institutions. It is worth highlighting that experts did not show much agreement in their responses regarding big techs, although relationship with the other types of entities still focused on competition. According to experts, banks should cooperate in standardizing payment solutions and enhancing their security. In the case of relationships with non-bank PayTech providers, the activities of banks should focus on developing a given payment solution and implementing a dedicated tech solution. This may mean technological and product cooperation. Basically, experts see high potential for cooperation between PayTechs and banks in the area of developing API-based payment innovation in all technological and marketing areas. The relationship with big techs, on the other hand, would be based primarily on the acquisition of new customers and development of a given payment solution.
Good morning, ladies and gentlemen. My name is Krzysztof Korus. I represent DLK Legal. Thank you for inviting me to this year's Forum Gospodarcze Time conference. DLK, together with the team of Professor Polasik from University of Toruniu, conducts PayTech Impact study you hopefully get familiarized with in the previous presentation. What I want to share with you in my presentation is some highlights from future. We asked our respondents to share their views how the payments market look like in 2025. And below you find selection of the most valuable items and responses. This is particularly important, this part of the study, due to the fact that, as you may have seen in the second half of 2020, the Commission have adopted strategies for payments and fintech in Europe. It is retail payment strategy and digital finance strategy. They are based on certain assumptions, how the market is now, how it looks like in near future. So it's extremely interesting to compare the views of the industry expert that we have collected and the views expressed in the strategies consultations. So let me now go to the specific questions and answer. The first question we have asked was whether the experts would believe that the cards would be dominant player in 2025 in European e-commerce and commerce. The answer was very strong for yes. We achieved one of the highest yes scores for yes and rather yes answers. That support the view that they still dominate payments market even in 4 years' time. My personal view is that it's actually not about cards. It's rather about payment mechanism that is global and single, so that we, the users, have one instrument, one mechanism that we use both for offline payments, online payments, domestic and international. The second question we asked is, how about the open banking? Is it important in principle as an innovation factor? And here we received surprisingly strong answer for yes. Yes, open banking is considered a key fuel for innovation in the upcoming years. Again, it was one of the highest scores we received in the study. European Commission is very supportive of open banking. As we see in the strategies, actually, it has already started the transmission from open banking to open finance. So extending the open banking, we know, to other asset classes. This includes clear support for the Separa API access scheme. So the industry group, working group I'm the part of, the task of the group, which is performed under the auspices of European Commission, is to deliver a scheme for PSD2 services like we know for card services. In the Separa API access scheme, the participants work on principles of good APIs. So what's the standard, minimum standard of an API, how good it should be, and most important, what premium functionalities are available in this scheme. And most likely the minimum set of premium functionalities would be the payment guarantee and confirmation of identity. So clearly the view of the experts and of the policy makers are aligned here. The third question we have asked is whether banks as entities will be the dominant players in the payments market. And surprisingly, the answer were and are very hesitant, much more hesitant than the questions about the cards or about the open banking. So the experts are not certain whether indeed the banks are the dominant players in the market in 4 years' time. The fourth question was one of the most surprise to us. We asked the question whether PayTech will result in interoperability. And surprisingly, this became a hegemon. We got absolutely top scores for yes and that yes. Yes, definitely, whatever the fintech and PayTech brings us in 4 years' time, definitely, in view of the experts, it's interoperability. My personal opinion is that the industry still misses disintermediation. So a concept, a result that the digitalization has definitely brought in other modern economies. If you look at the payments market, where you have, for example, card schemes, which are a pure overlay on existing account infrastructure, we see not that much disintermediation in the payments market. So perhaps open banking is the way to achieve this intermediation that has brought about so much benefits to the economy. Then another question we have asked is whether PayTech is good at doing payment products or the incumbents, the bank. The answer was very clear, and as to the strength, it was second after the question about interoperability. Yes, the PayTech startups are actually the best in doing payment products. The other way around, we see with the big tech, we have asked the experts whether big tech will be meaningful players in the economy in 4 years. The answer were very hesitant. Finally, there have been technical questions regarding the interoperability, and the first one, whether domestic schemes will be interoperable in 2025. The experts clearly prefer this option, but they are hesitant. Regarding the open banking, the experts consider the hubs, so a place where ATPP or ASPSP can connect to in order to get connection to all other TPPs and ASPSP instead of connecting to them bilaterally. The concept of hubs are clearly preferred by the experts, but again, they don't expect they are certain in 2025 as the way forward. And finally, the experts do not expect that by 2025 a single API is available or is obligatory. So this is the view shared by our experts. Thank you very much for your attention and enjoy the panel just after this presentation.
Ladies and gentlemen, welcome to the PayTech Impact discussion panel. My name is Michał Polasik. I'm professor at Mikołaja's Kopernikus University in Toruniu. I will moderate the panel together with my co-researcher, Dr. Krzysztof Korus from DLK Legal. Today we will talk about the future of open banking in Europe from the provider's and customer perspective. The starting point for the discussion is the preliminary results of Pan-European PayTech Impact.EU Study, expert survey and customer survey, which have been presented in the previous session. So let's welcome our panelists, our outstanding experts in payment services market in Europe, and thank you that they agreed to join the panel today. So first, welcome Ceu Pereira, team leader, retail payment at European Commission, Joanna Erdman, Director, Strategic Project Mass Young Customers and Transactional Banking in mBank, Gijs Boudewijn, Vice Chair Payment System Committee, European Banking Federation, Arturo González McDowell, President and CEO, Eurobits Technologies, Trisha Chansing, Senior Manager, Public Policy Payment and Finance Services at Amazon Europe, Konrad, Senior Policy Leader, Visa Europe, Tomasz, Owczarek, Head of Sales and Strategy, Mastercard. So let's get to the question. The first question I will ask Ceu Pereira. So the most experts expect that in 5-year horizon, the development of an open banking infrastructure of payment solution will be the main factor behind the development of payment innovation. Does FISMA consider the current market development as sufficient and we should wait for market adjustment, or maybe new regulation is needed?
Good morning, and thank you, Michał. Thank you for also inviting me to this panel. Well, innovation is a constant in payments, and innovation has somehow accelerated in recent years in the retail payments market, prompted by a mix of factors. It's been accelerated with the digitalization trend, where digitalization also raises new needs for digital payments. And one of the goals of PSD2, our framework regulation for payment activities, was to create room for innovations to flourish, innovations in technology, but also in business models, in order to give account holders more control and choice over access to their data that are stored in accounts, and also for the ways of initiating payment transactions So we can say that PSD2 was a real game changer. It's still young, though. It's been in force since 2018, and so of course we are waiting for further developments from the market. I would say that open banking is probably still in its infancy, and therefore we have to give it a bit time for the full development of open banking. But so far we can already say that this has been a success. That the EU open banking experience has also been replicated in many places in the world, and that the principle on which PSD2 is based can be further extended to other types of accounts and other types of services beyond payment services. So that's what we are expecting to happen, and perhaps in this, let's say, transition from open banking to open finance, we need to take account of the lessons of PSD2 when indeed we reflect on a new open finance framework, which we will do, and in particular when we review PSD2, which is foreseen for later this year. And then we will take those lessons and they will help us to design an open framework for open finance.
All right. Hi, open banking is payment accounts. Payment accounts is still banks in Europe, although our experts are a bit hesitant whether in 2025 it's still banks. As long as it is banks, and you know perfectly the banking community, can you tell us what's, in your view, the prospects of open banking for banks? So what's the perspective based on the experience we have in the past?
Okay, so it all depends, of course, what you mean with a bank. If you say the word bank, everybody has a perception of what the good old incumbent bank looks like. But I mean, it's a regulated activity, banking, providing payment accounts, attracting deposits, etc. So what we see is that the bank itself is changing, and there are many people, many entities, fintechs or big techs that just get a banking license, and thereby, by definition, they are a bank. I mean, the concept is not that it's the old brick and mortar bank anymore. So it depends on what you're calling a bank.
So it's rather deposit institutions, because they are most regulated.
Yes.
Fintechs usually don't do deposits, so mostly from the perspective of deposit institutions.
Oh, so do you want to restart? Stop. Do you want to restart? Do you want me to take that perspective, Krzysztof, just for the deposit-taking institutions?
Yes, from deposit-taking institutions, yes.
Okay, so I will start with that answer. Well, if you mean, Krzysztof, with bank, the deposit-taking institutions, I think it's still early days. So those of us old enough to remember still know that the first draft of PSD2 came about in July 2013, and we are still in the process of implementing it. I mean, it has been a long and painful regulatory trajectory, very challenging. And I think that only now, and well, Arturo is also involved in that one, we are getting our act together, for instance, in the Euro Retail Payments Board, Separa Api Access Scheme Group. Finally, we now are learning how we should have done it. So that in itself is very promising. Further down the line on the road to open finance, because PSD2 was only the beginning, and now we are only on the way of fully understanding the potential that it really should unlock, and that goes way beyond payment accounts. That should go to savings accounts, other types of financial services, open finance, and also beyond finance.
Okay, so the next question is for Arturo. The results of PayTech Impact study suggest great potential for banks and to collaborate with PayTech startups. What is needed, in your opinion, to make this cooperation effective and beneficial to both parties?
So, in the first place, the fintech space is a very wide space. So, what I'm going to respond is constrained to my knowledge and experience in the open banking space. So, what I see is that there are two types of collaboration. One is B2B fintechs acting as bank suppliers, and in the open banking space within the EU, that would be PSD2 supply side, so banks publishing APIs, and I guess that's working reasonably well. There are a number of technical companies that are helping banks publish their APIs and helping them with compliance. And also in the PSD2 demand side, there are a number of companies. Eurobits is one of them, and Tink as well. That are helping banks utilize APIs to offer their customers a new value proposition. So I think that's working reasonably well. Where there's a significant space for increased cooperation is in the B2C space, where a B2C fintech can become not a supplier of a bank, but a partner of a bank in a wider ecosystem. So basically, distributing or selling a bank's financial product or service, and for these to work, I think that we still have a long way to go. Although you can find a number of success stories, we still have a long way to go. And in my view, for this to work seamlessly, you need the right incentives for banks to cooperate with fintechs beyond mere compliance. So the current incentive banks have for cooperation is that there's a law called PSD2, and you have to fulfill that law. So you have to publish your API, and for as long as the supervisor believes that what you have published is okay, you're okay. But in order for this to work properly, you need, in my view, financial incentives for banks to do it better. So basically, what PSD2 is forcing banks to give away one of the most valuable assets, which is customer data, and as you know, data is considered the new oil, to their competitors for free. So one is the incentive to publish that information in the best possible way. I don't find any. And even if you think that this should be done that way, then the route I would choose would be a route like Open Banking UK, where there's a concrete implementation entity with resources to make things work. I think this is extremely difficult and not practical in the EU with 27 member states, but you can't stay in the middle of the road. You either allow banks to have a financial incentive to do things rightly, or you have a body, a correct body overseeing and enforcing open banking. And then there's an initiative Gijs already mentioned, which is Separa Api. This is a working group from the ERPB, where we are exploring the possibilities of using a scheme-based approach to make PSD2 actually work and enhance PSD2 with what is missing to maximize or reap its full potential. So I really look forward that these will produce valuable results for the EU economy, and in particular for the cooperation between banks and fintechs.
Okay, let's now move to the question to the card schemes. We are lucky to have representatives of both card schemes here. Arturo just mentioned the same with Gijs, that we are working in the Separa API actually to bring what? To bring a scheme, to bring to Europe PSD2 services in the form of a scheme. So now the question to the existing schemes, very experienced schemes, a bit neighboring to what we do. I believe this must have been a large, grand dilemma for you, how to react to open banking. You adopted certain strategies, and as I understand, both schemes have joined the open banking development. But to me, it looks rather like a defensive than offensive strategy. So can you shed some light how you perceive the open banking? What's your strategic approach? Is it something you need to compete with, or you just put something on top of your services? Konrad, can you please start, and then Tomasz, I will not ask the question again.
Thank you, Krzysztof, and thanks for having me here. As we look at the open banking, the primary objective here is obviously empowering consumers and ensure consumers' choice. And in addition to putting consumers in the center of financial ecosystem, open banking, our perspective, should encourage innovation, with obviously more players entering the ecosystem, which we're now observing with more tailored and relevant products and services. Open banking has allowed new players to emerge in Europe and has fostered new competition thus far, and which ultimately benefits consumer choice and consumer experience. European banks, by the imposed regulations, have to make available APIs free of charge, rather than having the commercial incentive to develop high-quality APIs, which, as we observed, might have to some extent stalled the uptake of open banking. While PSD2 was, as we know, intended to play a role in kickstarting open banking across Europe, the very prescriptive nature of the regulation has led to slow adoption and delays in implementations. In Visa, we believe that the effective consumer data sharing model should be principle-based, flexible, and agile enough to encourage innovation and allow different technologies to grow. This is one more important notion to raise. We should talk of any lessons learned thus far from open banking before we expand the same framework to open finance. And of course, should consider a market-driven, principle-based approach in Europe. A level playing field is key here to boost innovation and allow to fully use open banking for the whole ecosystem. There's no substitute for open and competitive payment system to foster innovation. We maintain in Visa an open network between our partners, clients, fintechs, to ensure innovation remains unhindered. Open finance could present an increased risk of fraud if consumer data is held by firms with poor security systems. And this is an area where intermediaries such as Visa can leverage the experience in cybersecurity, encryption technology, tokenization technology, and fraud or risk monitoring to drive security and trust of the consumers for open banking landscape. And we believe that security must keep pace with payment innovation and convenience. Secure environment.
In the interest of time, can we let Tomasz now comment on the same question?
Sure, yeah. So answering the question, what's Mastercard view on open banking? Let's maybe look at some numbers. So according to consensus, there is 450 TPPs across Europe already registered. Let's estimate 4 billion API calls flowing by the end of Q1 2021. Yeah. 700 million from UK alone. So in a nutshell, it's something what is already big, even though it's still at the nascent stage, and it's gonna be, according to, let's say, our belief, only bigger in the future. Yeah. Open banking is not only payment. Yeah. Mastercard right now and Visa and other payment organizations are mostly focused on payments. Open banking brings something more broader. I mean here the data flow, which were barely existent in the past, opening new use cases like account aggregation, credit decisioning, identity confirmation, and so on. Not to mention all other multiple use cases stemming from the premium API development. Yeah, so it's going to be something bigger, creating much more new opportunities, and taking into consideration our global strategy, which is basically being multi-rails provider, independent, irrespective of whether it's gonna be, ACH or cards or Bitcoin or data flows coming through APIs, etc. We want to play some role here. Yeah, so we treat it as an opportunity. We perceive it as basically something what increases the pie And we also see the need for organizations such as Mastercard to play a role. What kind of role we can play? So firstly, I think it was already mentioned. There is a need for standardization. There is a need for bringing the security, and at least these two areas are topics where we believe we have in-depth expertise, so we can bring to the market more certainty and more security and more standardization, which will translate into lower operational costs for taking benefits from them. Yeah, so obviously it can be a threat, but we rather see there is a chance to grow, to have a bigger business.
The question to Joanna: how do you assess the prospect of open bank implementation from the bank's perspective? How do it look like in Poland?
I think that it has been said before that we are at the very beginning of this road, and the open banking, due to the limitation of data that we can share based on PSD2 API, causes that the number of cases that already are on the market are really limited, and it is limited to the cases that Tomasz said. So credit scoring or account aggregation. Some companies that are more oriented on e-commerce or fintechs are building ID verification connections to deliver this kind of service to non-banking partners. And in my opinion, payments are only used as a cost-saving opportunity, but not as a customer opportunity and new service, and that's why I believe that we need to skip to another level, which is open finance. And open finance may bring additional value to customer. And I also believe in an API premium that is used on massive scale in corporate customer relationships, but is not used right now in the customer banking. So banks are at the very, very beginning of open banking. The next level would be added value to customers, and the higher level will be monetization of APIs.
Thank you, Joanna. So we know that open finance and monetization is now in the main topic in the sector. So the next, thank you. The next question is for Krzysztof. The funding of the study points to big techs as the entities that will be the biggest beneficiaries of PSD2 regulation. So, what benefits does Amazon see from open API development, and do they enable to offer financial services?
Thank you for inviting me. So I think there's terms which has been used like monetization, big tech. They're all quite fashionable, and I cannot comment on what other companies are doing in terms of using APIs. But what I can tell you is that our objective at Amazon is to delight the customer. So you would have seen recently we've launched the online store in Poland, and our objective was to provide all the payment options that are available to the customer based on the customer need. So to answer your question, if there is a need for a customer for payment options, we will investigate and we will provide that payment option, and we will leave other people who are specialized in the field of creating banks and financial services to keep doing that, whilst we will work closely with them to explain to them the expected customer experience, which needs to be safe, secure, and fast.
Thank you very much.
Now coming back to the European Commission, so what we wanted to ask you, another question is, we are not focusing on open banking, obviously, but it is only one of the top-level priorities for the European Commission, at least as I understand it. There are more which have been disclosed and follow up now and after the presentation of digital finance strategy, retail payment strategy. So can you explore a bit what's the current top priorities other than open banking, and is there a common denominator for them?
Well, I would start by saying that this common denominator is exactly the retail payment strategy, because it's a strategic framework that puts together all the pieces. There's a vision that is attached to it. We want to reduce fragmentation of the retail payments market in the EU. Despite the fact that we have a single euro payments area, it's still incomplete. So we have to make sure that that this vision still materializes. And also we want to put users at the very center. And so in our strategy, we've organized, let's say, our vision, ideas, initiatives around 4 main pillars. And these pillars are indeed meant to help us address all the key aspects in the evolution of the retail payments market. In these pillars, we announce a set of legislative and non-legislative initiatives. Of course, we will use legislation whenever we will need to use it, but we are not obsessed by legislation only. And so what we want is indeed that there's a full deployment of instant payment solutions, and that we have truly pan-European payment solutions that work for cross-border payments. And we want the market also to be regulated in a way that reflects indeed the market developments that we just spoke about, not only regarding the full deployment of open banking, but also making sure that our regulations are still fit for purpose, that we address all the relevant obstacles, that we make our regulations really consistent with the fast pace of development of the retail payments market. We also want to ensure that infrastructures are interoperable and are accessible, and that payments between the EU and other jurisdictions are also more efficient. So we indeed have some immediate priorities. As I mentioned, we think that instant payments are an immediate priority, the full rollout of instant payments. This will also support pan-European payment solutions, but also more competition at the point of interaction. And at the moment, we are looking at possible enablers for the full rollout of instant payments in Europe. We are assessing how we can further help this development, and we have not yet decided to go for legislation. We are indeed assessing the relevant factors, costs, and benefits. And then, of course, everybody has their eyes set on PSD2. We will have to review PSD2. This is an obligation in PSD2 itself. We'll have to draw lessons from its implementation. We will not rush into having a PSD3 we will do a very thorough process of assessment of PSD2. But of course, if we see the need to make amendments to PSD2, we will. And so this is also, of course, one of the let's say main possible legislative initiatives that we have in our work plan for the coming years.
So if I just want to underline that interoperability issues have received very strong attention from our respondents in the survey. So really people and industry experts need interoperability and believe that it is the way forward.
Thank you. So we see that the evaluation of PSD2 will be a very big topic in the nearest time. So now I would like to ask a question for Gijs. So in the PayTech Impact Study, about 55% of experts said that COVID pandemic would cause increase in investment or into payment innovation. However, 18% said it would be opposite. There will be decrease of investment in innovation. So which of these scenarios currently is playing out in your opinion? How does it affect on collaboration between banks and non-bank PayTech?
Well, of course, that is thank you for the question. A very good question, of course. Again, I don't have a crystal ball, and it's a multifaceted question. Of course, we could talk about that for hours. My personal belief is that, I mean, digitalization was ongoing before COVID-19, but it has got a tremendous upswing and acceleration because of COVID-19. We see that in the shopping behavior of people. They cannot go to physical shops. They have to go to the Amazons of this world to do their online shopping, and that's where they have to do their payments too. So we see a crazy, the card schemes see that in my country with Ideal, the account-to-account based remote payments, we see that skyrocketing, and this sparks, of course, further innovation. And also the buy now, pay later. We see the colleagues from Klarna already valued at $30 billion, for instance. So the buy now, pay later has somehow also gotten a kickstart from the COVID-19 crisis. The guys really reaping the benefits seem to be what we used to call the incumbent fintechs, like the Trustleys and the Klarnas, not the very small ones who are probably more in a supplier role, as Arturo there described. So yes, I do believe that. Of course, I can only read the signs that everybody can read, the investment rounds of fintechs, and that's of course what you see happening. Maybe a few words reacting also what Ceu said on our need for what Eric Ducolvé would call homegrown European solutions and their sovereignty. The two things that are sort of worrying me, at least, there, keeping us awake. First, of course, it's way too early to really have a quick review of PSD2. There's two things. One is again a fair distribution of value, creation of value on a very abstract level. Everybody agrees to that, but it's a very thorny question. How do you do that? How do you make a new initiative attractive for everybody from both sides of the market? So the business model thing is a very thorny issue that we see happening in the European Payments Initiative, but we also have that discussion within our Separa API access scheme. We have the principle of fair distribution of value. Yeah, right, but how do you do that? Given European competition law, that's one thing. The other thing is that it's pretty worrying because it's all about data. And one of the really big mistakes we made with PSD2 is that the European Data Protection Board got on board way too late. And we have now seen the final guidelines on the interplay between PSD2 and the GDPR. And that's not very reassuring if you look at data sharing, because they are very strict. We had an unprecedented cross-industry lobby, if you will, of the TPPs and the banks on the draft EDPB guidelines on the interplay between PSD2 and GDPR, but they were mainly neglected, and that is worrying to unlock that full potential of this open finance, in which we believe within a sector or even cross-sectoral data sharing. First, we need to get that one right before we make the same mistake again in the future. So I really believe at Commission level, at the EU institutions level, we really need to make some tough choices on business models and what can we or can we not do in terms of data sharing. If we don't get that one right from the start, the two right from the start, we are not going to make European payments great again, as I like to say.
Thank you very much. So next question.
So I thought the next question is to Asia.
Okay, in terms of investment, I would say that COVID made much more to digitalization of many economies than any CAO that we've met in the past. So I believe that in the new normal that is coming, we are still in a COVID phase. We expect that investment will be needed and will be growing, but the idea of investment is changing. So we need to rethink the business models of almost each company. Even Amazon, that is present in e-commerce space for years, needs to rethink what are the opportunities in the new reality. And I would say that all the companies, banks, fintechs, and also small businesses needs to invest, but the area of investment will be different. We need to find another ways of customer delivery. We need to find another ways of KYC or customer identification. Branches are, under real threat because branches in supermarkets right now open, but they are not serving customers because the customers are not there. So there is a lot of new way of thinking about investing in payment services and rethinking of business model in a new normal reality. But I believe that investment will be growing.
Okay, thank you very much. Now, question to Arturo, coming back again to the core of open banking, actually translating into open finance. Arturo, you have mentioned that we actually are learning now how to do well data sharing. It's indeed a painful process. We are all, with Arturo and Gijs, we are participants to the Separa API working group, and we face substantial issues and dilemmas while meeting almost daily now. So Arturo, based on what you have witnessed in the past 7 to 8 years of open banking history, so what's your advice for the European Commission when they are just about to perhaps regulate open finance? The advice from Gijs was clear: wait and see, don't rush. What's your advice based on your experience?
Okay, first let me clarify something. So I think 8 years is correct as an official time frame, but let's not forget that Bankinter, a Spanish bank, launched account aggregation back in 2001. And Eurobits itself was created in 2003 as an open banking / account aggregation platform. But getting back to your point, so first let's analyze the current situation, and so the first thing that comes to mind is that legislation takes way too long, especially when we're talking about innovation and competition. So official works of PSD2 started in 2013, which means that thoughts about the legislation started much earlier. So PSD2 is built upon a way of thinking or a world where Facebook, Instagram, Uber, or 4G either didn't exist or were in their infancy. Then it was finally approved in 2015. It entered fully into force in 2019. but it's only being finally enforced, hopefully, in 2021. So that's a lot of time. And the world has changed significantly in all these years. And remember, we're talking about innovation and competition. Secondly, I think PSD2 has a bad combination of too much detail and too much ambiguity. And a proof of the latter is that so many opinions, recommendations, guidelines, and despite all those, there's so many questions asked in the EBA's Q&A tool. In the third place, I think we do not have the right supervision or the right combination of supervisors. So, as I said, PSD2 is about innovation and competition subject to a high level of security, yet the European body that's in charge of it, it's the EBA, which has whose objective is related to the banking sector and financial stability. So it is no accident that PSD2 is not working smoothly if we do not have the correct body in charge of regulating and supervising it. And then I think it was mentioned by Gijs. I think there should be a better priority alignment between different pieces of legislation. So I see a conflict between some of the objectives of PSD2, the AML directive, and GDPR. So which make things a bit difficult. So looking to the future, I see two routes. So first, before going much further towards open finance, let's fix the payment space or open finance relative to payments. And I guess I'm no expert here, but it might be PSD3, RTS2, a combination of both. And from the TP perspective, there are three outstanding issues. I guess the banks would have a number of others. So first, we believe that there should be no unnecessary SCA. So SCA is great. It introduces security. But by doubling SCA in some instances, you're not adding security. You're just making life of the customer more painful. And using SCA just to watch your information makes absolutely no sense from a security perspective.
Arturo, thank you very much. In the interest of time, we need to now move to the question to gentlemen from the schemes. Thank you.
Yeah. Thank you. So this time, the first question to Tomek Owczarek. So do payment organizations see new areas for collaboration with current participants of payment services market, or maybe with other players in digital economy? Could you put some light on it?
Yeah, so as already mentioned, we see the open banking and open finance or even open data something new, something growing, and something what brings a lot of new opportunities. So in essence, or in consequence, we also see a lot of new spaces for collaboration. Obviously, starting from the existing players, so mostly banks. They may have need for various services, enabling them to gain more benefits from open banking. So some protective solutions or connectivity enablers. But obviously, we also expect other players coming to the payment industry or open banking industry at more rapid space. So firstly, I would say obviously fintechs. We assume that higher number of fintech may emerge and may start entering the payment space, using various new opportunities, such as already mentioned, account aggregation, better scores, or some possibilities of user experience for payments. Another thing is obviously big tech. So I assume that especially Google, but potentially also Facebook and maybe Amazon, I don't know, would like to gain some benefits from open banking, and obviously they will also need to partner with the established players already present on the market, such as payment scheme, in order to gain more benefits, in order to get access to standardization, to protective tools, which will help them to increase the interoperability, etc. But more importantly, I think there will be other players, totally new and untypical players from other industries, such as especially telco and I would say big retailers may be interested basically into entering that space. For instance, big retailer may benefit from access to the account payment data in order to do some data mining, and in order to based on that prepare some more smarter and more accurate product recommendation. And obviously, because they are new to that space, they will need to collaborate in order to get the benefits at faster pace. Yeah? So in nutshell, we see a lot of space for collaboration with both those who are already there, but also with those who will come here, I think, in the near future.
Thank you, Tomasz. And the same question for Konrad.
Yes, so I can only agree with my colleagues that we will definitely observe open banking as an opportunity for new entrants to the ecosystem. This will leverage for sure collaboration possibilities in the ecosystem needs to work together to embrace the benefits of the overall open banking, which would benefit only the consumer. Primary objectives, as I mentioned, of course, should be to empower consumer and especially consumer choice. The approach of regulators and actions of banks, in our opinion, would mean very little if consumers have won't have an appetite for the changes or appreciate new products and services. In this regard, a potential barrier which we observe might be of an uptake of the open banking might be definitely consumer trust. This is something which we are very much focused on. Consumers need to feel satisfied, and third parties, new entrants accessing the market needs to gain the trust of the consumers. And this is basically tied very much to the data privacy concerns. We believe, as I already mentioned, that the secure digital identity system based on internationally accepted standards and principles can improve efficiency and the user experience overall of the customers. Earning consumers' trust requires commitment to the privacy and the security. And the data sharing model should ensure both commercial flexibility and responsible treatment of data. Consumers should be empowered to make the informed decision when enrolling to the services that give them permissioned access to the data. As I said, we are focusing very much on the data, but we feel that is very much what the consumers are expected. We have seen through the researches that number of researches that the consumers are concerned about the data privacy. So that's why we need to be very much mindful of that factor. Empowering them to use their own data, not just the banking data, but many others as well, to develop a better picture of the financial well-being would offer them, in our minds, on a unique opportunity to deliver meaningful and valuable inputs.
Thank you.
Okay, so last question goes to you, Trishan, and let me give broader context. In our study, we put utmost attention on collaborations. So who works with whom, who has incentive to collaborate or not to collaborate, and we are struggling to get the simple but full picture. You represent so-called big tech. At the same time, you are a great expert in payments. We work on a daily basis, so I can fully confirm. And the question is, what's the strategy for big tech? It is to ensure under one roof the payments competence, or you rather inclined to cooperate with the payment services providers? And if this is the way forward, what does it mean for you, a successful cooperation with a payment services provider?
Yes, so as I said earlier, we're very focused on delighting the customer experience. So and we will remain at Amazon as a service provider. So there are various types of products and services. Everyone is used to the online stores, but then there's Amazon Fresh, Amazon Kindle, and all those types of products. we're very much focused on ensuring that the customer experience is always secure and frictionless, and the customer comes back. So I think it's partnering with parties providing the services is the best option, because I believe experts who are in the business of doing banking or providing core services, which are regulated, should be separate from the users of it, so that we are focused mostly on customer experience and providing the right goods and services. But I think in terms of collaboration, I think we need to kind of think of it, especially in my line of work at Amazon. I believe that collaboration, we have learned over the past 2 years that collaboration means not only collaborations with banks or financial institutions providing the services, but it's very important that we collaborate with policymakers and regulators. Just to give you a specific example, we have 1,000 people at Amazon currently working on strong customer authentication, and that's kind of a big endeavor in terms of delivering regulations which is aligned with what the regulators expect and what the customer expects. So I think for me,
1,000. You said 1,000.
1,000. So I think. Well, just to conclude and answer your question, collaboration, I think we've realized that it's just not commercials that we need to be discussing with Visa, Mastercard, or banks. We have to collaborate with policymakers, we have to collaborate with national regulators, and we have to collaborate with the Commission. And we learned that lesson by implementing PSD2.
Thank you. And we have, I think, possibility for 1 or 2 comments, if you have to comment some in general. Some snap voices.
Well, if I may, just to add to what Trisham said, I mean, at Amazon, it's only 1,000 people working in SEA. I think across the banking industry in Europe, it is a multiple of that, and then you have a multiple of that working on AML, KYC, etc., etc., etc. So all these efforts, which are of course very understandable and necessary, take away the resources from doing what businesses should be doing, is providing value to their customers. I mean, we should also rethink that, and perhaps RegTech or the technology, AI, etc., can help us there. But it's of course crazy if in an industry maybe 20% of people are only doing, let's say, the legal and compliance stuff instead of making and delivering services that make customers happy.
So financial services are complicated value to deliver, and this is the cost of this.
Let me add to what Kai says, because basically he's reinforcing one of the points I made, but from the cost perspective. So I think being compliant in Europe should be not so expensive as it is, and the way to achieve that is with simpler, more understandable legislation. So not a piece of legislation where 2 different lawyers will not make their mind up whether what's meant by the legislation, and that was going to be my suggestion relative to open finance. So more principle-based, leaner, and clearer, so that we can innovate versus focusing all our resources in complying.
And my take on the discussion is, I think the success of open banking, open finance, will ultimately boils down to the commercials. I think there's not enough time spent around discussing why someone would want to be providing that service, and it's for free. So I think there are kind of different discussions also happening across in different countries, and I think it's the right discussion. And from a merchant perspective, when we provide a payment solution to a customer, it comes at a cost. So therefore, if we choose to do a certain product, we know that there will be underlying costs. So I think this is where I think the debate has been very kind of philosophical. We need to open this data flow to people. But I think at the end of the day, it's commercials. People will open the data flow if it benefits them, and then merchants will adopt new payment methods if the cost of payments decreases. So I think that's my summary and based on the information and discussion that we've had.
Thank you. So maybe one comment to what Arturo has said here. I couldn't agree more actually that there may be an issue, especially in the mid to long run, with the growing compliance cost here, because it happened in the past and it seems that it may continue also in the future. And in result, actually, if the compliance cost will be only bigger, I would say either European-based players will not be able to compete effectively with the players in payments industry from, I don't know, Asia or America, or European consumer will be at disadvantaged position. It will be basically prevented from using the most cutting-edge payment solution. Maybe it will be also a little bit more protected, but at cost of convenience, simplicity, and so on. And the strong customer authentication is probably the best example here. Yeah, I think it's obviously the right direction to bring more security and certainty to the client. But the way it's being implemented right now, based on regulation, which in certain areas is probably too prescriptive, seems that instead of convenience, security, but also simplicity, we get more complicated process, less understandable for the client, and obviously much more expensive.
Absolutely, we face the substantial dilemma whether we finally should become, as Europe, a silo where we do products and regulations only for Europe, or we are open to world to both export and import a global solution. So this is the biggest dilemma that the European Commission must respond to. Thank you.
Thank you. We come to the end of our discussion panel. We thank our experts for discussion and giving us fascinating and complex insights into the future of banking and open finance in Europe. And thank you for your attention. You can contact us on the project PayTech Impact.EU website, and we are available to answer further questions at the virtual stand of Nicholas Copernicus University in the lobby of the online conference during Time Economic Congress. Thank you very much.
Thank you.
Thank you.